This really feels like a classroom. I don't know. Yeah, Gautam, come on. I know. So this is like a classroom arrangement, and when anybody comes late, Gautam needs to stand outside. Good morning, everyone. On behalf of the School of Foreign Service at Georgetown University, UNCDF, PIFP, CEM Benchmarking, Center for Financial Inclusion at Axion, Micropension Foundation, and all of us at Pinbox, I'm very delighted to extend the warmest possible welcome to Mr. Subhash Garg, India's Finance Secretary, Mr. Swapnendu Mohanty, the Chief Fintech Officer at the Monetary Authority at Singapore, Dr. Joel Hellman, Dean's Walsh School of Foreign Service at the Georgetown University. And of course, William Price, Senior Financial Sector Specialist at the World Bank, co-editor of the book, and our partner in crime on all the journey we've had to increase pension coverage across developing countries. And a hugely warm welcome from all of us to all our friends who've traveled across the continents to be here. Today, the people here from Kenya, Solomon Islands, India, Mexico, Rwanda, Fiji, Peru, Uganda, United Kingdom, Albania, Singapore, Bangladesh, United States, Emirates, South Africa, Spain, Chile, Canada, Papua New Guinea, and Germany. Oh, I'm tired. Gautam and I, and many of our other people who are on the Pinbox team, have been working on pension reforms, and especially on design and implementation of inclusive digital micropension arrangements targeting women in low-income households and non-salaried informal sector workers more generally since 1998. Now, the reason I mentioned 1998 is because that's Gautam, not me. I'm still young. So, we launched a small experiment in India in 2008, which we cherished and christened as Micropension, to test whether low-income individuals would be interested and capable of saving for their old age. This grew over the years into a national-level micropension program covering about 2.1 million low-income individuals spread over 100-odd districts in 14 Indian states by 2015. Along the way, we made countless mistakes, I assure you that, despite the best intent. And today, our team has this distinction of performing the largest mistakes ever possible in design, planning, implementation, and administration of pension schemes in the world. But each of these mistakes that we made, we came back with a field-tested, technology-driven solution that ensured that the same mistake would never happen again. In this process, as we started working in more countries, including Nepal, Indonesia, Rwanda, Uganda, India, Kenya, and Bangladesh, some important things became very, very obvious. One, that most developing countries face nearly the same identical initial conditions, problems, and challenges. Of course, large-scale informality of the labor market, modest intermittent incomes, extremely tiny formal pension coverage, usually less than 10% of the workforce, a predominantly young workforce, low retirement literacy, where terms like retirement and pensions did not resonate, and an increasingly low level of confidence in children serving as a sensible portfolio to an old age security. Two, we realized that most developing countries were remarkably similar to each other in terms of fiscal strength, coverage, legal framework, governance, social and cultural differences. Three, we realized that most countries already had a strong political and policy commitment to bridging the pension coverage gap and a large latent demand for retirement products amongst millions of their excluded citizens. Four, we realized that most of the pieces of establishing an inclusive pension arrangements for excluded workers already existed in many countries. A mature digital inclusion infrastructure with electronic payments, national IDs, broad-based outreach through cooperatives, self-help groups, banking correspondence, fund managements, and etc. Many countries are already thinking about actually implementing new micropension programs. Several others have begun to take steps towards this initiative. It was obvious that developing countries could therefore benefit hugely from the learnings of other countries, from both success and failures in design and implementation of inclusive pension arrangements. So we decided to launch 2 parallel initiatives to jumpstart a global dialogue on digital micropension inclusion among countries and among financial inclusion and pension inclusion communities. One of these initiatives with Pinbox was a global project of the book titled Saving the Next Billion from Old Age Poverty, Global Lessons for Local Action. I shouldn't be hesitating on that. And the second in the series is the regional and country-level roundtable consultations. The book, which is edited by Gautam Bharadwaj, William Price, and I, is a result of an incredible collaboration between 42 leading experts from around 20 countries who had spent many months to put together an incredible set of ideas on pension inclusion. This initiative would have not been possible without their unstinting support and amazing insights. And of course, the support of taking my calls at 3 in the morning as well, because there's something wrong in their chapters. Will, Gautam, and I are thrilled to have Mr. Subhash Garg, the global pioneer of government-backed micropension programs for low-income workers, based on fiscal incentives, with us to release the book. Mr. Garg has also very kindly written the foreword for this volume. We're also very delighted that Mr. Swapnendu Mohanty, a person today who is synonymous with Fintech, has agreed to join us today to put his shoulder into bringing together Fintech, financial inclusion, and pension inclusion communities globally into micropension inclusion and developing affordable, secure, effective solutions that will work for low-income individuals across the world. And we're equally delighted that Dean Helwan has joined us this morning, and we're very grateful for all the support we've received from Dr. Hellman and his colleagues, Dr. Holly Wise and Elizabeth, in hosting the first roundtable on the digital pension inclusion. And of course, none of this would have been possible without the incredible efforts and support of Mr. William Joseph Price, who helped convert a remarkably challenging and even mad idea in 2016 into the first giant step on saving the next billion for old age poverty. Thank you, Will. Well, just for last things, I'm Parul Khanna. I'm with the Pinbox, and I forgot to mention that earlier. And I'd like to request William Price to introduce the key themes for the book and the perspective on pension inclusion and coverage expansion. Thank you very much for being here today.
So thanks very much, Parul, and it's a great pleasure to be here today, and welcome everyone. So as Parul said, my name's William Price from the World Bank, and I wanted to touch on some of the themes, mainly from a pension perspective, which is my background after I decided to leave macroeconomics. And before I do that, there's a simple answer as to why this book, and it's that Gautam and Parul came with this kind of crazily ambitious project. And you try everything possible to avoid them and not take their phone calls. And you think, I think I may be too busy for an endeavor which is 24 chapters, 620 pages, 2.2 kilos, or nearly 5 pounds. But for anyone else, resistance is futile. So you can save a little bit of time by saying yes straight away rather than trying to hide. But the longer answer is that anyone who's worked on pensions has pondered the issues we're talking about today literally for decades. And we all know there's growing numbers globally who are going to be old, and actually that's a good thing. But what we think now, why this book, why now, is that finally the ingredients are here to tackle some of those problems. The developments we'll hear about in ID, identification, IT, financial inclusion, linked to the knowledge of how to create good pension systems that really deliver for their members. So we know in the pensions field, if you come from that background, unfortunately in the last 2 decades, there's been too little progress in expanding coverage. Hopes with good intentions that labour markets would formalise and coverage would expand haven't had as much fruit as we thought. So we also know that we're going to be successful in expanding coverage. beyond the necessary but also necessarily limited role of the public sector in guaranteeing a minimum income, we need a paradigm shift. So I was very conscious, particularly since joining the World Bank, coming from a pensions perspective, I didn't do anywhere near enough thinking about the financial inclusion. And that once you start looking at it and you sort of see the amazing things that have been done, you realize that finally there's a chance actually to solve some of those issues that you thought were literally impossible to solve. But it was equally clear when talking to people in the financial inclusion community that there wasn't enough thinking about what a good pension looked like, for understandable reasons. But we know from the pension side, the good pension systems that deliver for members need to be deliberately and carefully created if they're to be efficient, secure and sustainable, and help deliver a decent retirement income. For many well-known reasons we may hear about today, the simple market, many buyers, many sellers model that works in so many other markets doesn't work well in pensions. So it seemed that there was finally a chance to bring together the sort of how to enroll people from financial inclusion with the what to enroll them into from good pension design. And these big picture issues were bolstered by evidence from countries large and small, developed and developing, of actually innovation being put into practice and real results being delivered on the ground. So from the developments in the UK through auto-enrollment with 7 million new members out of a labour market of 30 million. From Turkey with a new auto-enrollment pillar, 3 million new savers within a year, cutting costs by over 50%. And from our own work with Pinbox in India, piloting some of the ideas in this book, and increasing enrollment by 500% in one pilot, 1,000% in another, and increasing coverage in one village from 3% to 20% in a few months. So the best thing for us, though, as editors, was I think we made, 45 calls, and we got 44 yeses straight away. And so this is a real tribute to all of the authors who worked so hard and no doubt thought that they didn't have enough time either. The structure of the book, I won't go into a huge amount of detail, but there's the 10 thematic chapters, which are the sort of how-to guide to build each part of the pension value chain, the new digital pension value chain. 13 country chapters, which give a range of insights of some things which are already delivering real value, others where people have done great work on either the pension side or the financial inclusion side, and we want the real message to come out that starting, if you had your time again as a policymaker, starting on both those endeavours at the beginning would be a much more fruitful way of going. But let me end these remarks as a sort of former policymaker or a recovering policymaker or also a recovering regulator. And on a personal note, I wish I'd had access to the combined wisdom in this book 10 or 20 years ago. We, particularly when I worked in the finance ministry in the UK, we used to come up with some great, clever plans for ministers thinking about how to improve pensions or savings or help for low-income savers. And then you'd talk to the tax authority, people in the tax authority or the Social Security Administration, and they'd come at you with all these annoying questions like, how do you identify people? How do you find them? How do you administer the accounts? How do you stop duplicates? How do you stop waste? How do you stop unnecessary payments and money being spent on accounts which won't be used? And I think, to be frank, back then we kind of rolled our eyes at what we thought of these as these second-order implementation issues whilst we dreamed our grand dreams. And I wish I'd realized much earlier that these issues are not incidental but fundamental to finding a solution. And that we hope from this book, the head of pension policy in some country may be thinking actually number one on their list shouldn't be those new investment regulations or the new regulation and supervision, important though that is, but should be thinking about ID in their country or the link to financial inclusion and payments. I also wish much earlier that we'd realized the importance of having a kind of program office or a mission mode to get things done. It's now quite popular and it's one of the things that should always be at the center of a program. But I'm particularly pleased that in this book, I think for the first pension book I've ever read, it actually talks about the how to implement, how to create a program, how to create a mission, how to get the energy and endeavor to push through with all the reforms. So with that introduction, let me thank the authors again for helping us make our job very easy and pass over to Dean Hellman for his opening remarks.
Thank you so much for having me here, and thank you. It is such a great privilege to welcome such a distinguished and diverse group from so many countries who are engaged in the practical efforts of poverty reduction, financial inclusion, promoting growth to our campus here at Georgetown University. I want to say just a couple of minutes, because you are visitors here to our campus, just to let you know a bit about where you are. You are on our beautiful campus in the middle of Georgetown. We are hosting you here at the Walsh School of Foreign Service of Georgetown University. The School of Foreign Service, which is about to celebrate its 100th anniversary, is the oldest school of international affairs in the United States. It was established in 1919 in the immediate aftermath of the devastation of World War I, at a time when the leaders of the world were gathering together and thinking about what were going to be the key foundations for securing peace in the upcoming century. And it's in that spirit that they created a school to train the next generation of global leaders. That school was called the School of Foreign Service to emphasize that the key aspect of leadership in that next century was going to be service and engagement in the problems of the world. And over the last 100 years, this school has been at the lead of so many issues that are critical to securing the peace. And in the course of that 100 years, those issues were nuclear weapons and the Cold War and terrorism more recently, many key and important issues. But over I would say the last 20 years or so, it became increasingly clear that if our mission is to train generations to secure the peace, that poverty reduction, promoting growth, promoting economic and financial inclusion was absolutely essential to that mission, and has become an important part of what we do at this school every day, both in training our undergraduates, and we have 1,500 undergraduates and nearly 1,000 graduate students who are training to be part of the community that you are already leaders in. So that's a sense of the place that you are and why we're actually so pleased to be hosting you here at this time on this important topic. Personally, myself, I've been dean here for 2 years. I came after a 15-year career at the World Bank in many countries with representatives here, India, Indonesia, Kenya. I was fortunate to serve in many of those countries. As I approach this issue, in which I am not an expert, though, I do want to just place some context on the discussion today, because I think it's important. And I think that those specialists in their particular areas sometimes don't pull back and look at the broader picture of poverty reduction over the last 25 years. And it is remarkable to me and the audiences that I speak to every day that I have to remind them that the last 25 years have been the strongest era of poverty reduction in recorded human history. That's a pretty significant statement. But more people have moved out of poverty in the last 25 years than we have ever seen and ever been able to record over time. If we look at the progress on some of the key Millennium Development Goals, we see just extraordinary progress across the board in areas like maternal mortality, infant mortality, education and education of girls, just extraordinary improvements across so many ranges. So we tend to be very negative about what's happening in the world, and we don't recognize the achievements, the extraordinary achievements that are in fact dominating this era. I like to quote the head of our Global Human Development Program, Steve Rattle, in his book, The Great Surge. Just 25 years ago, more than 55% of the world's population lived below the poverty line, of that time $1.25 a day. That number has come down to just under 12%. In one less than a generation. So it's an extraordinary set of achievements. Now, for me, what that means, rather than resting on our laurels, is that the great challenge of the development community and the great challenge of poverty reduction is not only keeping this momentum going, but the great challenge is to look at where poverty is going and will be given this progress. Because despite the extraordinary progress that we've made, there are still extraordinary pockets of poverty that remain, and there are trends that we can see now that are going to shape poverty in the next 15, 20, and 30 years. And I believe our mission, and I think about the School of Foreign Service with a mission to secure peace and a recognition of the critical role of poverty reduction in securing peace, that what we must be doing is thinking about and developing solutions to the poverty problems that we will be facing in the future. And indeed, I would say, from my personal standpoint, one of the reasons why I left the World Bank to come back to academia is because I think that we need still so much fundamental research and thinking on what those poverty trends will be and how we deal and build solutions to those poverty trends in the future. My own personal background has been in the issue of conflict and fragility and how critical that is to thinking about the remaining poverty challenges and the poverty challenges in 20, 25 years ago, 25 years from now. But if I think about the issue that brought you here today, I think about this as a critical issue if we are anticipating the trends in poverty over the upcoming years. You are focusing on an absolutely central core issue of where poverty will be and why it's so important to generate the kind of solutions that this work is seeking to do. 1.2 billion young, low-income salaried workers, non-salaried workers in Asia and Africa, Latin America, are excluded from formal pension programs. With increasing life expectancy, with this mass-scale exclusion from pensions, with the negligible life savings, with dwindling family support in old age, a majority of these now young, low-income workers will face the terrible prospect of living their old age in poverty. Women in particular are the most vulnerable to poverty in old age than men, and a majority of them are in the unpaid workforce. They face a higher life expectancy, of course, lower incomes comparably. So without an urgent and effective policy, regulatory, and business response to pension exclusion, poverty among the future elderly, I believe, will soon merge, and I think what I hear from the work and the research and the engagement that you've brought together today will be one of the dominant causes of increased global poverty in the future. So that's why we are so pleased to have such a distinguished group from so many countries come together to really try to develop practical, workable, feasible solutions to financial inclusion, to encouraging poverty-reducing savings and pensions for this now young, low-income population that will soon be the source of our poverty troubles in the future. So I welcome you all here. I salute you for the forward-looking approach that you have to thinking through the dynamics of poverty reduction, for extending the momentum of this extraordinary era of poverty reduction that we have seen over the last 25 years, and ensuring that that momentum is maintained, that the last mile issues that are going to ensure that we don't have persistent pockets of poverty have viable solutions. And I must say that not only the subject matter which you're addressing, but the way in which you're addressing it, by this kind of what can only be described as a magnum opus, because it deals with so many themes, so many countries, because it deals with the data, the theories, the issues, but also draws on the practical experience of countries around the world. And what I find most exciting when I flip through the book and just the table of contents is the learning that's going on from the countries themselves, and the innovation that's happening in the developing world that is creating solutions that were not anticipated, and not sort of necessarily as high on the agenda of other countries that we are usually copying from. So the source of innovation is coming from so many of these cases, and it's exciting. And it's the kind of forum that we are so pleased to be able to host here. Countries making innovations on critical areas of poverty reduction, sharing their experience, building a body of knowledge, and solving problems in a practical and feasible way. So it's in that spirit that I welcome you here. I applaud the work that you're doing. I look forward to the solutions that are generated here. And I must say that I look forward to the learning on this topic. One thing I heard out in the hall as we were having our coffee is that I guess this is officially the sexiest topic in pension reform, that many of you who are experts in this area are some. So I'm very happy to be involved in this extremely sexy topic, and welcome you here. I hope you take the opportunity not only to learn, but enjoy our campus if the rain doesn't keep you from it. Enjoy our campus, enjoy the energy, the momentum of the students, and thank you very much for being here.
Thank you, Dean Hellman. I'd just like to invite Mr. Swapnendu Mohanty, who will be giving us the keynote on leveraging fintech to bridge the financial and pension inclusion gap. Mr. Mohanty.
Good morning, and Parul, thanks for having me in the last moment and telling me to talk about pension, which I have no idea. But I'm going to try. But let me tell you something. With one of these closed roundtable with all the central bank governors, they were discussing about policies about fintech. And one of the very senior central bank governor made a comment that these fintechs have no understanding of economics. They have no understanding of monetary theory. They wear denim to work. They write code in garage. What they know about solving the world problem? And I was sitting side of him wearing a denim. I have no understanding of economics. I have no understanding of monetary theory. So with that introduction, let me try to tackle this subject. So I have spent, I'm the Chief Fintech Officer of MAS. I have spent 2 years now. I'm not the recovering regulator. I'm the learning regulator now, trying to change the way regulators think for last 2 years. The debate about fintech, is it good, bad, risky? We stopped that debate for last 2 years. And if I go to any of the conference today, still they're talking about, is fintech good, is fintech risky? I think that's a discussion we should stop having anymore. I think the world is shifting to a digital economy, and technology is the driver, and no point in second guessing that charter. When we started thinking about a policy so the question was asked, why should a policymaker care about fintech? So when we started our journey 2 years back in Singapore, we kind of figured out that the word fintech is trapped between a narrative in M-Pesa, the payment, and some cool lending in Prospero lending in this part of the world. We really expanded the whole concept of fintech to all asset class, whether they are capital market, or they are retail banking or private banking. We went back to the classical definition of technology, because technology is supposed to solve back office problem, middle office problem, the front office experience. So let's go back and define fintech in those contexts. And that's where we started. And we looked at around the whole sector, and we realized that there's no really regulatory barrier for fintech to succeed. In fact, when we backtested some of the ideas what fintech can bring to the whole sector, the whole financial sector, not a single instance, barring few, had a policy barrier in terms of regulatory barrier in Singapore, more in Singapore, because we regulate through an activity, less of the whole enterprise regulation. The real issue was technology risk management, because what is happening, the regulators, because they were not well informed about technology, their policy stance was saying nothing. Good example, almost all fintech solutions are being built on cloud. You go across what you call cloud computing, it's not the cloud. So you go across any regulatory jurisdiction, the regulatory policy stance on cloud computing is nothing. They will say, is it risky? They will say, we don't know, and they will have no clear stance. The first thing I did when I joined MAS is to clarify a clear guidelines around cloud computing, and that kind of leapfrogged Singapore's stature in the whole fintech world, because the whole solutioning, you start from the Chinese giants to any fintech around the world, whatever who are solving the whole pension insurance issues, they need cloud computing guidelines as the first policy clarification from the regulators. The second one, and we talked about experiments, failure. The second policy change which we made in Singapore was the open banking. The whole architecture shift. Most of the systems in the financial sector are now what we call the enterprise trap. They're actually a large box of system where you change a piece of code, it costs them $50,000 and 2 years of change. So how do we disaggregate the whole financial sector, the systems which drive it, and make it more modular? And that kind of leads to the whole innovation in a very rapid way. You can fail fast, innovate quickly, and move on. It's what we call open architecture. Thanks. Thanks for bringing this slide. I don't have a, so, oh yeah, here you go. Thank you. So this is the slide I want to share with all of you. If you don't understand, that's okay. You can ask me after this, because I also don't understand what you do. So let me try to bridge the gap. The first thing if you want to create a future financial architecture, this is how it should look in our mind. It should be completely open. It should be highly connected. It should run on cloud. And the whole architecture should sit on a structure called open connectivity. If there's a lovely solution which deals with micropension, they should not spend billions, millions and millions of dollars to integrate to a financial sector. They should be able to plug in and plug out as quickly as possible. It's almost like in this hall, if I have to remove the aircon and replace, I have to bring down the whole hall, I guess. But in the new world of system, you just buy a new aircon and just replace it by plugging into a power. That's how the new systems are being designed. It is a plug-and-play system. And that's how the architecture will shift as we build the new financial sector. Because our promise in our part of the world is to deliver a financial infrastructure at 1/10 of the cost. Because that goes behind the whole infrastructure support if you want to do micropension. Because the cost of system today is extremely high, they're closed loop, they don't talk to each other, and if you go cross-border, it's a disaster. So how do we deliver an open architecture which is cross-border, which is connected, is what we are trying to do in Singapore last 2 years. Shifting the discussion to policy challenges. When we start dealing with a cross-border infrastructure, there are 5 policy challenges we deal with. First, I think all of you probably in your sector you deal with is called know your customer, the digital identity. Because the whole sector is going to be developed on what we call the core national digital identity. That's going to be the future of all of us when we do banking or when you buy a pension or you buy insurance. So the whole sector will be cross-border in a sense, but there's a policy gap between different countries. Today, the way we do customer onboarding in different jurisdictions is all different. If you ask any banker, almost 80% of their operating expense is customer onboarding. They spend millions of money trying to comply with the regulatory policies. The whole onboarding process is a complete mess. So how do we shift our dialogue to build an open policy around KYC? How do you recognize the whole know your customer between different jurisdictions? The second thing I spoke about the cloud computing, because this is something very, very topical. We got to find a way between different policymakers to accept cloud computing as the go-to standard. If you don't accept that, forget about a scalable solution in any financial sector. It's not going to work. The third challenge is that as we get more digital, in fact, the next financial crisis will be a cybersecurity crisis. So how do you build a common policy standard around security and authentication? And this is going to be getting more and more a big challenge for all of us as a policymaker as we go to the whole digital economy, connected economy, because the whole premise of this infrastructure is that there's somebody looking at your system, and the old-fashioned thinking that controlling system is putting tons of people doesn't work. It has to be a system solution, a thoughtful solution, and cybersecurity should be part of designing any solution. And if you are designing in your sector, the whole pension sector, you must bring cybersecurity as part of your design thinking. If you don't design for it, the consequences of this whole thing will be hard to imagine. And you can see every day there's a newspaper article on how there's a breach of data in different sectors. The fourth challenge is regulatory reporting. And this is becoming a costly exercise, the whole sector. How do we digitize the whole thing? How do we make regulatory reporting a far more technology-driven, far more simple, is what all of us in the whole fintech sector is looking at, the RegTech or the supervisory, the way to automate the whole supervisory process. And the last piece, which is very important in your sector, is data privacy and compliance. And I must tell that if there's everything good about fintech, there's one thing very, very not that good about fintech, is you may actually end up, what we didn't think about is the data exclusion. If I know all of your Google searches, I will think differently about you. What you search privately is what you are. And if you see my Google search, and if you somehow find a way of what I search in my Google, you will think I'm a different person. And this can create a remarkable risk for all of us, because today, if think about insurance, we kind of socialize that risk, because I don't know my health status. I don't say my whole health status unless I get a medical report. If you figure out I'm searching for a certain symptoms through my Google search, and I'm guessing I'll have that particular disease, you must start excluding from that whole insurance business. So the whole digital data